All right, guys, we're going to give this another shot here. Let's see if we can't.
Always on a Monday.
Always on a Monday. All right, we are officially back live. We've got the volume for the gentleman sitting across the camera from me. But for those of you that have been following along on the audio version of Layer 1, we do Layer1Lives on Monday, and we usually push them to our community, to you guys, through YouTube. But we decided we're going to push this to you guys via an audio version as well, and we're going to, just do that. So how you guys doing today?
Doing great. Yeah, we have a special guest back from Ireland. So excited to have him on.
Yeah, I'm done basically significantly killing my immune system over there. It's completely compromised after 9 days of Guinness and Irish whiskey, as you know so well, Q. So I'm a little under the weather, but you guys will have to carry me along here. We've got a lot of news.
Yeah, we had a good episode with Tom Ivy while you were away, and literally I think I left Ireland like a couple days before you, maybe like 4 or 5 actually, and like I would get your Snapchats and have anxiety because you were still drinking after I was like still trying to recover. But no, that was a fun time, man. I'm glad we all did it. But yeah, so again, for those of you that are hearing this for the first time, Layer1Live, basically, we're basically going over the news for the week and kind of just, doing general chit-chat as it regards to all of that. So we'll start with some team news here. We do have a new team member, Ben Orgera. I'll let you kind of touch on that, Mike, real quick. But yeah, go ahead.
Yeah, definitely. Super excited to have Ben on. He's actually on the way over here. He is a junior at Carnegie Mellon University, super sharp kid. Loves crypto, loves to talk crypto. So I'm sure at some point we'll have him on the podcast to kind of, maybe break down some things more on the developer side that maybe he's interested in crypto. But that's what he comes to us both for Sutler Ventures, the business behind the Layer 1 Live and Layer 1 crypto podcasts. And then also for Product Capital, the hedge fund that we all work within as well. So super excited to have Ben. We'll obviously, like I said, try to have him on here, get you guys all the social media info or anything like that. We'll try and turn him into a superstar.
Yeah.
Maybe have like Ben's dev table if we got Dimitri's desk or something. Yeah. But we're excited.
Yeah, we need to get him on one of these Layer1Lives, have him call in and see if we can break down his crypto knowledge, see if he's up to task.
Ooh, yeah. We'll apply the heat. I'm sure he knows, like, from a technical level, way more than 3 of us combined. So that'll be fun.
Yeah, that sounds good. Yeah. So we've got, before we get into the news really quick, we've got that winner of the TRX giveaway. So we had that $25 giveaway, or $25 worth of TRX giveaway based on the last, I believe, episode with Tom Ivy. So we had you guys retweet that episode. Based on the guys that we had retweet that episode, we have the winner as Shahid Hamid. Unfortunately, he is a Man City fan, but we will, in fact, still honor this giveaway. So Shahid Hamid, if you're listening, thank you for retweeting that podcast episode. We'll get in touch with you via our various platforms, and you have won the $25 worth of TRX. So don't go dumping that on everybody too shortly.
And we got a big game coming up, right? This weekend, Chelsea, Man City. Is that where the hostility comes from?
Yeah, I would say that. I don't know where they lie in the table. I know Man City lost a game. Actually, no, they pulled one out recently against one of the smaller clubs, even though they were kind of like falling behind. That might have been Liverpool. Well, I'm getting all of my Premier League teams mixed up here. You go over there for a week and you come back, you don't know anything. But anyways, Shahid Hamid, congratulations on winning that.
Definitely, yeah. We'll jump right in here, Deem. An interesting kind of airline. What's that?
Speaking of Europe.
Yeah, speaking of Europe here. Interesting airline-related blockchain news going on.
Yeah, Hans Air basically came out, breaking news that they made a partnership with Winding Tree Company, and we know these guys, like we've talked about them just recently actually, but we've worked with them at ICO Alert, and looks like they've secured, this is not their first partnership when it comes to airlines, but this is the one that made the headlines just recently. Hans Air basically is going to have is going to issue tickets on the blockchain, and basically through the partnership of Winding Tree, people will be able to essentially use crypto to buy tickets. The only thing is about this news that is not so like peachy, I guess, is just that the fact that this is a very small airline, so they only have like 3 planes, and they don't fly that frequently. But we see that slowly, these smaller airlines will, make these partnerships with like, Winding Tree to start like catering to crypto. And I think that's kind of like the test ground, before the major airlines, will hop on board and like start implementing this technology, because, they don't want to implement it where it's like, well, has this been used anywhere? Has it been successful? You know? So it's kind of like that.
Yeah, I remember us talking about this a few weeks ago. I've killed about all the brain cells I had, but I think that it was either on air or off air. We were saying that like there's not a lot of incentive for a giant like United or American Air or somebody like this to go and partner with a quote unquote public blockchain. But if you can scoop up all the small airlines and you're basically the provider, there's a ton of value there.
Right.
So you got to start small, and it's not surprising that Hahn Air is a smaller one.
Yeah, buried in this article too, it says blockchain startup Zamna raised $5 million to automate airport security checks using blockchain and biometrics tech. So I know we talked about reputation and things like that with Tom and all the things that come along with that. So that'll be interesting to see how blockchain kind of permeates through airport security and things like that. So yeah.
Hopefully it improves the whole process.
Yeah,
it's like one of my giant pet peeves. But
waiting an hour in customs, you don't like doing that?
Oh God, brutal. Anyway, on with more breaking news. So Maker is officially launching, kind of quote unquote launching their new multi-collateral DAI today. Essentially, for those who aren't aware, DAI, the stablecoin on Maker, you could really only collateralize it with a single asset. Now you'll be able to do it across multiple assets. They haven't stated which ones that will be. And essentially they're going to be phasing out the old single collateral DAI, or what they will call SAI, S-A-I, over the coming months. So it's not going to be like a giant kind of launch where, the single collateralized gets removed and multi-collateralized gets added. It's gonna take some time, which is the right way to do it. But for anybody that's been following Maker from the jump, it's been a long time coming. So I think I tweeted out, much congrats to that team. They're definitely executing. They've obviously seen a ton of growth. So it's it's great to see that stuff come to fruition.
So what's the importance of phasing out old DAI and bringing in this new DAI?
It's a good question. I would imagine it's kind of one of two things, right? One, just kind of general confusion for people. If you have a multi-collateralized DAI, you can obviously still, use a single, collateral if you like, but there's no reason to kind of restrict yourself to the single collateral. So why kind of confuse users with both? And then the second piece could potentially be that it would just cause too much confusion on like a technical level, right, on the blockchain. So, ETH is consistently pushing the limits of transaction kind of space, if you will. So it might have something to do with that, but yeah, I'm not entirely sure.
Yeah, I think that, it's to do with like the smart contracts that they have to update for it on the tech side. But what's interesting, the interesting part that how they're going to phase this out and how long it's going to take them to do this. They said the process is going to be pretty seamless, but they also said that all the loans have to be repaid. Yeah.
Oh man.
Before it happens.
What a mess.
Double check that. I'm pretty sure they did say that.
That sounds like a ridiculous process that's going to need to be carried out. So is this going to? It says it's going to gradually phase this out. So maybe over time they can. Yeah, they can't do like a swap in like a week or something like that.
Yeah. I'm pretty sure I read this somewhere. Now it's gonna bother me. Because they said they have to square out the books before they can move to the new multi-collateralized.
Makes sense. Yeah, you can't have just like single collateralized DAI hanging in there
Yeah,
for years or
if they're
whatnot.
trying to phase it out, So
It looks like also the Maker. I don't know if this is old news, but it looks like the Maker Foundation had already partnered with Compound Finance.
yeah.
Is that
they've been already partnered?
okay.
They're just saying that the new multi-collateralized DAI is going to be on Compound.
Gotcha. Well, before we get on to this next piece of news, which has to do with some news that we talked about last week with the Lolli app and Alibaba, we had a comment. Vio Barari said, BTC wick down to 8K. Time to accumulate, ? So I'm going to throw this your way, Dimitri. I know you're probably going to talk about it tomorrow on Dimitri's desk, but what do we think?
Yeah, great question. Love price action questions. So I'm going to talk about it tomorrow at 5 p.m. Eastern, where I do my Dimitri's desk. But in terms of this move that we just recently had, I'll tell you one thing. Based on the lower time frames, it looks like the steam for the downside is running out. Even though, like on the bigger time frames, it looks like there is potential to the downside, but don't get caught in like a short squeeze position. So I'm not gonna say it's buy it here, but just keep this in mind that the bears are running out of steam in the short term. But if you really want to know, where the support is, where the price action is, and where it might be heading, tune in tomorrow at 5 p.m. I got you.
Looks like I still got liquidated, so good times. Good Monday.
Live, learn, liquidated.
Yeah. Pre-episode start, Dimitri was fuming that he didn't hold his short open apparently. So
yeah,
you got fudded by
I got
Zach.
fudded by my team members. It's cool because we do that to each other all the time.
Yeah,
I do it to them, they do it to me. It's a balance.
Gotcha. All right, so if you guys followed Layer1Live last week, we talked about Alibaba partnering, or I guess the other way around. Lolli partnered with Alibaba for Singles Day, where this obviously like kind of reverse Valentine's Day in China, where people go out and buy things for themselves on this one day. Lolli gave 5% back in Bitcoin for purchases on Alibaba if you use their service. This was only for U.S. citizens or Chinese residents within the U.S. There was no offer for Chinese citizens here, so it was simply for people that use Alibaba in the U.S. or Chinese residents that, for one factor or another, were just in the U.S. at the time. But it looks like midweek we had Alibaba come out and say that the partnership actually didn't exist, and then we had Lolli come back and say no, it actually does exist. And so the what I've been able to gather from this story is that what most likely happened is this was a legitimate partnership in one form or fashion, and then actually it picked up too much steam, and it almost seemed like it was getting picked up as Alibaba accepted Bitcoin, which is obviously not the case. And if you have that be the case in one of the bigger markets being China, you don't want that to be the case if you're the Alibaba CEO or people that are working within Alibaba. So basically it's a he said, she said, but it was likely that there was that partnership, but it got too much steam picked up.
Yeah, it's I think it was pretty clear Alibaba did not want any blockchain press that had not been run through China previously. With everything they've got going on, which we'll talk a little bit about later in this episode. But yeah, that's wild. I mean, for Lolli, it's kind of like what's the saying, like no press is bad press, kind of thing, because now you've got people looking into it and they're like, oh wow, look, I can buy things that are in Bitcoin. So
I think they've been operating with that partnership with AliExpress for some time. The article talks about how much revenue they've brought to a company for the Singles Day, specifically around that time. And I think the article again mentions what you mentioned, Q, is that the Singles Day got so big that now, like, that they're hyping this up around it, it's starting to be like, well, we don't want to have that exposure to working with the company that's doing BTC, and it's such a popular event now. So now we're just gonna kind of talk our way back on this.
Or at least let's say that we're doing that so we can cover our bases.
Right.
Yeah.
Interesting.
Yeah, so that's pretty much it there. Obviously, there's some of that shroud of information based on having a partnership with a company that's based in another country. So it's kind of a weird across the pond situation there. But yeah, so what do we got next?
Interesting Bitcoin news, right? Typically, I feel like Bitcoin news is centered around price action, but um, for me, this was amazing to see. I think it's been on any Bitcoin maximalist mind for a long time. It has to do with privacy on Bitcoin. So essentially, there are two or multitude of BIPs that have been floating around the Bitcoin developer ecosystem. BIPs are Bitcoin improvement proposals. Um, these ones in particular have to do with Schnoor signatures and something called Taproot, which will implement privacy aspects for Bitcoin. Which, if you ask anybody who is a Bitcoin maximalist or has been in crypto for some time to look at the weaknesses of Bitcoin, privacy is almost number one on their list. Where if Bitcoin becomes some sort of giant world currency, it's pretty easy to surveil for a lot of governments, and there are obviously issues there. So this is essentially a collection of over 200 different devs who are working on taking these pre-existing Bitcoin proposals and basically battle testing them. Right, most of the people who have pushed back against privacy for Bitcoin has been that they're worried that the proposals will be instituted and will not kind of have gone through the same rigor that others like SegWit have, and could potentially cause security issues on Bitcoin. Traditionally, it's incredibly difficult to get giant, proposals like this approved. So it seems like now there's kind of a good collection of devs and progress and push towards implementing privacy on Bitcoin. So huge for Bitcoin as we move into 2020 and 2021.
Yeah, I wonder how long that's gonna take, to start it off. Go ahead, Q. Sorry.
No. That's a fair question too. There's a lot of platforms that say that they're getting stuff out here within the next 6 months, and then that turns into a year, and that turns into longer. But what's the incentivization for these devs? Do they get paid by the Bitcoin Foundation? What's the?
Yeah, it's an interesting point you bring up, because I think the last sentence, or maybe one of the main sentences in the article, is talking about how Square, the company behind Square Cash, is investing significantly in Bitcoin. I mean, they've gone so far as to build out their own kind of like 4 or 5 or 6 person team, and they're going to be doing a lot of things to push Bitcoin forward. That's really all because of Jack Dorsey. We've talked about that previously, and how he's a big Bitcoin proponent now. But that's a big one. There was also, as kind of a parallel piece of news, a new giant fund that was launched called, I think, the Anonymous Fund, which is pledging like $200 million to privacy-focused cryptocurrencies and cryptocurrency projects. So everybody that's backing it is completely anonymous, so that if it comes to a point where there's some sort of government intervention, there's no issue there. But all in all, for me, that's always been my biggest concern with Bitcoin, is the privacy aspects. I think that's why I'm so bullish on projects like Monero. I mean, you even see it like watching football this weekend, just as a tangent. Apple's biggest commercial push is on how they care about privacy.
Yeah.
It's going to be a huge topic in the future. And if we start to see fiat currencies slide, crypto is going to be, right there in the heart of that privacy conversation.
Yeah, that privacy has kind of formed itself as like that fourth leg of that trilemma that blockchain tries to solve, right? You got scalability, decentralization, and security, and then you got that fourth leg of people that are like, well, you have all those things, but I don't want to be tracked by my government or yada, yada, yada. There's definitely a lot of important things that need to happen with privacy. So I agree. Does that hurt Monero or Zcash or some of these privacy-focused tokens if Bitcoin can, for say, push out an upgrade where they are private?
Yeah, I mean, absolutely. It's definitely a huge competitor, but we'll see, how long it's going to take for it to come out, and how it rolls out, what are going to be the features of it. Because I mean, at the end, right, you still have Bitcoin that's not as scalable as others, right? That, in terms of transaction per second and so on. So we'll see how that's going to work. Speaking of other companies that are, offering privacy, we had some news come out today. I think, Q, you're the one who actually broke this about the Wimbledon thing.
Yeah, the Mimblewimble situation. I guess some dev kind of went. I don't even know if it was dev, to be honest. I kind of just got a quick look at it and shared it with you guys this morning because our partners, Block Venture Coalition, have been involved with at least Beam. I don't know. Obviously, Mimblewimble's incorporated with that, but they've been super interested in Beam privacy. And I guess some guy just went in there and was able to kind of figure out through testing. How did he actually do it though? Because he was able to through AWS, able to open up their privacy network in a function or another.
Like by running $60 instances on AWS, he was able to understand 96% of participants in the network sending transactions, and I guess he's not able to see how much was sent, but it's it still hurts from a privacy standpoint. I mean, it brings up a good point in that it's great to see new privacy things happening, whether it's Mimblewimble or it's some BIPs thrown on Bitcoin. But and to kind of go back to the original point, Monero still kind of has remained king. I mean, it's been around since 2010, 2011, and I think while Bitcoin will hurt Monero if it's able to include privacy, it's going to get into the conversation of kind of what level of privacy, right? That's always been where Monero is strong, in that, okay, yeah, Mimblewimble, you have some privacy, but Monero, it's it's pretty much top of the line when it comes to fully private transactions. So yeah, it's we're kind of going down the privacy hole there. We got a lot of news.
Yeah. Just as a TDR or TLDR, Mimblewimble's privacy. This is in a blog by the guy who actually went and did this function. But Ivan Bugatti, it was on his blog. It says TLDR: Mimblewimble's privacy is fundamentally flawed. Usually only $60 a week of AWS spend. I was able to uncover the exact addresses of senders and recipients for 96% of Grin transactions in real time. It pretty much said this means Mimblewimble should no longer be considered a viable alternative to Zcash or Monero. And there were responses from the Mimblewimble team. They said, Grin devs knew about this and don't claim privacy at that level. And I guess Philip from BVC had said, Beam had its own, privacy,
update.
To make sure that linkability didn't exist. But yeah, we'll move on, man. I know that was going down a little rabbit hole. Scott Harris, Firestone, one of our returning OGs, he says the sky is falling. So I think he's talking about the Bitcoin price. I'm not sure.
No, it was still steady. 81.66.
Damn it, Scott! Why are you scaring us? What's going on, man?
Gotta have strong hands,
Strong hands.
Strong hands.
Some strong hands. All right, so let's move into Ethereum.
Yeah, I thought this was interesting. Just in following Ethereum here, traditionally when you hear about a flippening, you heard about ETH overtaking Bitcoin, but as of late, this flippening has involved ETH transactions. So as of late, ERC20 transactions have actually overtaken general ETH transactions, right? So the ERC20 tokens as of late have been transacted more than ETH itself, which, every ETH maximalist is pointing to hey, ERC20 transactions are working, and this is amazing, where Bitcoin maximalists are pointing to the fact that USDT has been implemented on ETH as an ERC20 token, and the data suggests that it's about 80% of the transactions for ERC20 that are made up by USDT. So it's kind of it's cool to see, but how much of it is real versus people just wanting to transact USDT on ERC20 versus Omni or Tron or anything else. There was another interesting nugget in there that you'll like, Q. When it comes to the ERC 721 contracts, which have to do with non-fungible tokens or NFTs, that since the start of the year has grown. Those transaction numbers have grown 350%.
Oh yeah.
So we're starting to see some life out of kind of the NFT world. A lot of it has to do with Gods Unchained, which we've talked about previously. But all in all, I wanted to kind of pitch to you guys in a discussion format here. Where do utility tokens fall in this, right? Because it seems to me that as ETH continues to grow, it's moving more and more towards just DeFi, just decentralized finance in general, where if 80% of the ERC20 token transactions are USDT, not to include all the other stable coins, DAI and all this, and you have so many, interrelated DeFi projects building on ETH, is ETH still being seen as a place for utility tokens like we saw in the ICO boom?
As the being like that smart contract
Right.
leader that when they develop when they opened up that ICO phase at first, and that kind of went away. Now they have DeFi is coming in as a second thing. That makes perfect sense to me. With just being how stable it is in terms of having creating these smart contracts and so many developers are available to build on it. Natural progression would be to create these DeFi products that we've been seeing coming up. But just adding to a point of USDT, Bitfinex.
Yeah.
So that's a rabbit hole of itself.
Yeah, I think people are starting to realize and have realized for a long time now that utility tokens are going to be. I just don't think that Ethereum's going to be able to do exactly what it was necessarily made to do. I think smart contracts with ICOs were a great use case, but would that technically be a use case, a utility of Ether? Like raising funds through Ether is that a utility of Ether?
Yeah, certainly.
It's a smart contract.
Yeah.
Certainly, it's certainly utility, and utility's weird. I mean, I think part of the story in the discussion here too is that DeFi is hot, right? Like finance within crypto is hot, whereas everybody's still holding bags of these quote unquote utility tokens from your 17 and your 18 time frames. And there's not a lot of action, not a lot of funding, not a lot of hype around utility tokens in general, but
yeah,
it's an interesting kind of broad theme to follow.
Yeah, I think the utility. I don't think the tech has caught up with the utility in my opinion. I think that there are a lot of opinions made in white papers and such that we're going to change the world and be the first decentralized marketplace and do all of these things that I don't think the tech was ready for the opinions maybe that were in white papers and the utility of the tokens that were going to launch on these platforms. I don't think the tech's there. We're still, kind of in that phase of building this tech out. So, yeah.
Sounds like an EOS supporter to me, dude. Which runs us right into our next topic. What's in all seriousness, what's going on in the EOS community, my man?
Yeah, absolutely. DAPP Network launched their hackathon yesterday. So in an effort to kind of build out their ecosystem, they're taking $50K USD worth of DAPP and they're offering it to DAPP developers. So you could essentially create a team, and I believe the three categories are DeFi, Shocker, gaming, and just building out their various tech layers. So something like that makes the DAPP network function in a more efficient way. So those are the three categories. Basically, the way it works is they form a team. You can register. I believe the first one is going to be the first submission is going to be not in person, so not direct, and then there is actual on-site. There is an on-site hackathon that's happening. I don't know exactly when, but basically this is going to happen over a week, and based on where you end up, and I'll bring it up here, the winner is going to receive $500K in DAPP. So at current price, that's somewhere in the vicinity of $15,000. Runner-up 7.5, second runner-up 5. Crowd favorite will get 5K. Best social post will get 3K. So I don't think you even need to be part of the DAPP hackathon to do a best social post. And then best mentor. So the mentors are going to be already assigned, and those are going to be people that are helping these teams kind of understand the DAPP ecosystem, the EOS ecosystem, because these don't need to be EOS developers. They don't need to have that background, so they're trying to bring other devs in. So basically trying to build out the DAPP network space, and they're certainly doing a good job. The token price isn't strong. It's taken a fall off since its all-time high, probably somewhere in the vicinity of 80%. But that might have just been speculation on different things. So certainly they have one of the best communities within EOS right now.
And this is Liquid from Liquid Apps, right?
Yeah, Liquid Apps is the company behind the DAPP network.
Gotcha. Yeah, and shout out to our man Zach Gall. I think he won the social post.
Oh, really?
Did he?
Win that last year? Not for anything Liquid Apps, but I think it was for like a EOS hackathon.
He would.
Or maybe he got runner up or something. But I remember he was bullish on that for sure.
Gall knows how to work the community, that's for sure. So it looks like the on-site hackathon is actually in Tel Aviv. It doesn't give an actual date, and I'll obviously anything that we're talking about here, we're gonna link, post the episode. So obviously can't like do it live. That would be too much work, and I wouldn't be able to talk to you guys. So that'll be linked afterwards.
Yeah, no, that's awesome. Just in general, we see EOS just post that, settlement is starting to kind of pick up in action in terms of, development and just kind of investing more into their ecosystem. My question is, Q, what's an update on that congestion we've been talking about on EOS? Is there anything new on there?
So that congestion's still happening, and to be honest, more and more people are like looking. It's providing an opportunity for platforms like Telos and Warbly that are more centralized, even more so than EOS, but that they allow for a kind of more free movement within their network. So the congestion's still happening. At this point, I think everyone's just waiting for this EOS to kind of die down, this contract setup, this mining, and it hasn't. To a certain extent, because a lot of dApps are still having issues within like their own application for their users. So only a couple kind of have staked for the users. I know Dice is planning on bringing that online soon, but yeah, there's a ton of issues. Like we were fortunate enough to get into EOS early enough, and I'm still there, obviously, that I had a bunch of CPU, staked or a bunch of EOS staked to CPU. So I haven't had these issues, but certainly a ton of people, if they have 100, 200 EOS staked, they haven't been able to, get many transactions through. So just on a good note there, more networks need to be doing these hackathon things. So many good ideas and people getting together within our space happen within these hackathons, especially on site. I know, like even PK, our former colleague at ICO Alert, like he ended up getting a job through one of the hackathons on site because he met, I believe it was just one of the members. I don't know exactly his name, if it was Benny or one of those, but yeah, he was able to meet, and now he's one of the primary members of Liquid Apps. So these are super important, and I wish more networks did it.
Yeah,
and Tel Aviv is a amazing spot for that. For those that don't know, Israel is huge on tech. Like there's so much tech that comes out of Israel that's actually been like sent outside of Israel to the rest of the world, and we might not know it, but we are using like the tech that actually was born there. Yeah, it's a huge tech.
Interesting.
Place,
What's
innovation.
Yeah, in a big party town, right?
Yeah, that's it. I'm just trying to, go over there.
Right? I was like, why is he talking about the tech there?
Must be hiding something, man.
So yeah, I mean, I've been impressed with EOS over the last few weeks, not just because of the SEC settlement, but then did you guys last week talk about the news on Block One now being able to vote their EOS?
Yeah,
we talked a little bit about that. We didn't really cover it in depth. There's a lot of people that think they're going to run as a block producer, but that seems like a little bit more problems. They've already got the SEC off their back at least a little bit. Why even get into that? But the voting is going to be done. There hasn't been much information. It literally just came out that Block One was going to be able to start using their votes and throwing it towards certain things, and that honestly doesn't even apply to voting for block producers as much as it does voting for proposals. So there's a ton of like information that hasn't been put out to the community yet. So maybe they will vote for block producers, but that's just not been made apparent.
Yeah, and there was I've been meaning to watch it, but the big Blocksburg event for EOS too, right? Like Brendan Bloomer was up on stage. What's going on there?
Yeah, I'll go ahead and link both of the transcripts because somebody did put out a transcript of Dan Larimer and Brendan Bloomer talking. It was pretty general. They talked. It wasn't an EOS event per se. It was just an event, a blockchain event at Virginia Tech, and EOS kind of had its genesis there through the meeting of Brendan and Dan at Virginia Tech. Like that's, you could kind of say Blocksburg did, kind of birth EOS in a way. So it wasn't an EOS event per se, but Brendan and Dan kind of talked on a general sense about what EOS can do, and it was very much a PR thing as far as kind of getting more people involved in what EOS is doing. So the transcripts are there. I'll drop them, but they're pretty general.
Gotcha. Okay, so not worth my time then, is that what you're saying?
Yeah, I mean, you can go ahead and look, and maybe there will be, and maybe I can talk about it on the next episode. But it was very much explaining why blockchain is going to be the next, internet sensation to people that are in suits, like just in general.
Yeah, that makes sense.
Right.
Yep.
Yeah, for sure. Well, cool. I'll move on to some IOST news. Not all good news. I know we've certainly had some issues with BIS on IOST. So for those who didn't know, before Layer 1 was Layer 1, it was the IOST podcast. Sutler Ventures is a big block producer on the IOST blockchain. I'm a big proponent of IOST and have been bullish on them for a while. But there are issues with BIS, which is kind of an in-house exchange for IOST. Some of the investors in IOST also started a small exchange called BIS, where they were offering crypto and stocks, some of which were US stocks on the same exchange, which now evidently the Chinese government is not happy with. So they've basically frozen BIS's ability to do things like withdrawals or deposits. But in talking with the IOST team, who's obviously close to BIS for those reasons described, they basically said that it's an issue with the stock inclusion, not an issue with any sort of hack or anything like that. So funds are SAFU. It's just basically a giant pain in the ass when I think IOST was really getting some nice momentum around blockchain news in China. So kind of an overall bummer, but and if you were looking to sell IOST at this jump up but have voted through BIS, you're going to have to wait a little bit. We'll obviously keep you guys posted on that, as will IOST. We're hoping for, a quick resolution, but in the way that governments roll, I'm sure it's gonna be a little while. So more news will certainly come. There.
Yeah, this has been an ongoing narrative, but I wish I heard more from IOST on this specific, event. I wish IOST would come out and kind of take a hard stance on, hey, this is exactly what's going on. This is kind of the timeline that we're working with. Did I miss that?
No, I mean, I think they've done a decent job of communicating that through the community. I think, IOST is not BIS and BIS is not IOST, so it's kind of tough. IOST doesn't necessarily want to take a stance on it, especially since they're a Chinese blockchain company in China, as is BIS, right? So if BIS is basically going to unfreeze everybody's tokens and then disappear, it's not necessarily a boat that IOST wants to be hanging on to, right? So
fair.
I think more communication is always good. Fortunately, that's what we're here for, right? To deliver the good news or bad news. But yeah, I mean, it's tough, right? I mean, I'm sure admins for IOST are getting crushed because while BIS is related to IOST, they're not the same companies. Like you would see a lot of exchanges,
Gotcha.
are kind of related.
So where some people would think that they're in constant communication with BIS, maybe they're not even receiving that information from BIS. So yeah,
exactly.
Yeah, that's fair. That's fair. I know Metanix was talking about this too, in that it wasn't just kind of the retail investor that might have $500 or $1,000 worth of IOST on this exchange, but there were some pretty big, large entities that voted through the BIS platform because BIS was really the only one that was offering voting at the time that mainnet launched. So there's some people on there with like 200 million in IOST or something like that. So I'm sure that'll be interesting to see going forward.
Yeah, for sure. I think like Alpha Coin Fund was one of them, and some people who are sweating a lot more than I am with some of the IOST I have on there or others. But yeah, I mean, typically, pros or cons to the Chinese government, however you want to kind of lay it out. They do things around blockchain that tend to protect users, so there's really not a scenario that I see where they kind of like take tokens or anything like that, right? Or shut it down and users aren't able to access tokens.
Uh,
But, you know, it just doesn't make sense. Kind of like the SEC, you know, putting a squash on an ICO and then not doing any work to get the ICO, you know, investors' money back. It just doesn't align with the whole point. But anyway, on the positive side, we're still seeing blockchain news coming out around China. I think I saw an article today that China was talking about integrating blockchain into the military.
Yep.
That was like such a like what kind of thing that I didn't look into it, but you know, it's basically a theme and a trend that we're going to continue to follow here. IOST has seen some great price action, Neo, Tron, a handful of others, where I don't think we've really seen too much of, at least in the recent years, blockchain projects getting a boost or any sort of decline based on the region that they're in.
Right.
That seems to kind of have slowed down a little bit, other than just the general China bans Bitcoin FUD that you see every once in a while. So if we start to see that, where China is pro blockchain and Russia's anti-blockchain or something, right? You know, it'll be interesting to see how those various projects who align themselves with those countries could be helped or hurt because of that instance.
And maybe a rotation of those projects moving out of those countries, you know, into more friendly countries. So we've covered this, I think, in the last episode, Q, where we talked about, you know, China and the blockchain development there, from, you know, anywhere from like logistics, you know, infrastructure, and like military. You know, now military is going on board with this. So yeah, it's gonna be interesting to see that. I had an amazing thought that I wanted to discuss, but I lost it. So
that honestly, for those of you listening at home and they're like, oh, what the heck's going on here? How can they? Dude, when you're talking live, a lot of times you can get caught on a tangent, and then you're like, and then you kind of want to keep talking, and then you're like, it's not coming. So it's
Monday, folks.
Hey,
bear with us.
Listen, he needs another cup of coffee. So.
Oh yeah, that's what I was gonna.
Boom, just like that.
Thank you guys.
Exactly.
So on last episode we were discussing like that interview that happened with Jimmy, right? And like discussing just kind of the outlook for IOST, you know, coming into 2020, and they said that they're focusing, they're going to heavily focus on actually government contracts. You know, like they've already worked with the airspace, I think, or some kind of air. Remember that? You know,
NASA equivalent in China.
Yeah, exactly. So they already work with them, and they're looking to focus more on these projects as they've been developed, you know, and being promoted in Asia, to try to be pushed out. So they're gonna, you know, try to land more of these government contracts.
Right. Yeah. Or Singapore. They've done a lot of work with the Singapore government. You know, Lawrence and the team seem to be pretty thrilled with where they sit with Japan regulation.
Oh yeah,
because they don't have a ton of gambling dApps, especially now that I think it was Topia bought IOST Play and are kind of turning around that situation. So yeah, it's interesting. I mean, we haven't really seen any sort of enterprise level partnership do anything more than just kind of like quick hype in the market. But if there's actually business that could be done over a long period of time in China, that could be a significant advantage for Chinese based projects versus those in the US or Canada or Australia or Russia, whatever. Right.
I think Dimitri made a good point last episode where he was saying with these partnerships happening and a lot of them happening in the background, maybe with like a government for say like you guys are talking about now, like how does that provide utility to the actual token? Like there's one thing for the platform to, you know, partner with God, how would I even go about this? Maybe let's say a gaming platform or gambling platform or a social media platform where this utility token can be actively traded amongst users or used for logins or used as a rebate, all of these different things. And then there's another of just like partnering with a country or a huge entity and not having that token be used there, maybe just them using their own blockchain. Again, it just seems like some of these partnerships, it's like, okay, well then how is the token being used in that instance and how does that provide utility?
It's a great point. I mean, in my mind, I kind of break it down in two ways, right? I kind of break it down in that in one side of the coin, it's basically like somebody from IOST knows somebody from the Chinese version of NASA and, hey, can we like work together? We'll hire you as like a consultant or something. Let's explore blockchain. There's no real commitment that we're going to use the IOST blockchain or any of the tech that IOST has, but hey, like here's a partnership opportunity, right? That's kind of one side of the coin, which is, to your point, not very beneficial, right? But the other side of the coin, understanding that these blockchain companies, these blockchain projects are really service oriented in a lot of ways. Like if you, as I kind of look out into the future with all these varying proof of stake networks, or all this varying technology and all this varying innovation that's happening, the way that these companies make money is by offering some service to enterprises, right? So if you start with, the Chinese version of NASA utilizing the IOST blockchain to complete some action or provide some solution, well, inherently the token has to be used, right? So for proof of stake, as we saw in the that great article from the placeholder VC and Chris Berniski, right? One of the problems that proof of stake networks are having right now is that everybody loves the staking because they get tokens, they get all the inflation. But if you don't have the kind of network blooming next to it, it'll die, right? So you have to have the token being used enough for the staking to really exist for any point. So if you can kind of combine those three things, where there's a partnership where that blockchain is being used and thus the token is being used, it adds a lot of value to the overall ecosystem in the same way that like you adding new staking partners would, probably in a bigger way. So it's not kind of like a one-stop shop, one-stop solution, but if you can do that across multiple enterprises in China, where not only is the token being used, but you're also getting paid, right, as kind of this service, this tech service company, now you have a real business. Now you have a real kind of network and real momentum behind the project.
Right.
This is a super interesting discussion because it brings to the forefront kind of like having a company like you're talking about onto the IOST blockchain. In a way, it's not bringing, I guess it could technically bring a ton of transactions to the network and therefore like a ton of, token transfers and things like that. But what if this entity only possibly uses the network 100 times in a month? Maybe they're doing 100 transactions. Does the value increase as the number of transactions, like if they're making hundreds of thousands of transactions now in IOST, is that more valuable than if they, only did 100? What's the difference there?
I think fundamentally it's more valuable if they're getting more use out of the blockchain, right? If transactions equal the quality of the solution, right? If transactions on the IOST blockchain equal IOST being a super quality solution for that enterprise, then fundamentally it's great. What we've seen historically and what I think applies still today is that even if they only did one transaction once, or they did 100 a month, the token price, the token value is going to increase regardless, right? We haven't really gotten to a point where fundamentals equal token price, and sometimes it works in a token holder's favor, where the fundamentals don't equal the token price and the token price is higher. But oftentimes, especially as we've seen in the bear market, the fundamentals don't equal the token price because the token price is lower. So it's kind of this, like, this changing balance between equilibriums and whatnot.
Gotcha. Yeah, it reminds me of something to the akin of like when Mixer added Ninja, or when these platforms kind of bring in like streamers. But the difference there is like they're bringing in a streamer that adds 100,000 users to their platform. So that's where I see like the utility increase there, but that might be apples to oranges, to be honest. I heard Boomer in the back talking, adding his 2 cents to this conversation.
Yeah, he's super bullish. Anything that increases the amount of food and chicken in his bowl. So yeah,
perfect. Then he needs to pump IOST price. All right, here we go.
He's scaring bears outside.
Perfect. All right, well, let's move on to, I think we're on to Cosmos now. There was a little bit of TRX news. I know we had kind of put in our tinfoil hats on about that Poloniex acquisition.
Mike.
Yeah, it might be Mike. Yeah. So Justin Sun, I guess it did come out that they did acquire Poloniex. What's the reasoning behind the acquisition here?
Well, anytime you can expand the potential inclusion of Tron in places, I think that's good for Tron. I mean, some of the further rumors that I've heard were that basically in discussions with the new version of Poloniex, he was basically told, if you don't invest, we're not going to list Tron. Again, tinfoil hat, super rumor mill. But if you look back in the history books, at one point Poloniex was the largest exchange in the world. I mean, they were the Binance, they were the Huobi, and as many things go, they kind of got they kind of got hurt a bit as Circle took them on and were under the umbrella of the U.S. regulators. So,
yeah, it'll be interesting to see how Tron goes from here, because I feel like one aspect that isn't being talked about is the governance that's happening within Tron. I think I know, who was it that put out the IOST, the report probably like every other week? Paradigm. So based on the Paradigm Fund, they broke down a bunch of the staking percentages of the tokens that are currently circulating on the different platforms. And Tron was somewhere in the vicinity of it must have been like 10% of the entire
15,
circulating supply of Tron was staked, where other platforms like IOST, EOS had an even stronger percentage there. These are staked to certain nodes so that those nodes can then run, obviously, the network. And it's interesting to me that that's not being brought up. Maybe it's not used enough in the West, and so that we don't hear a lot about it. But the same issues that EOS might be going through, Tron is going to be going through on a 2x basis if they have only 10% of the network voting for governance on the platform.
Yeah, and there's not a one-stop solution that equals success either.
Yeah.
You can't just go out and get a giant number of people staking and have a high staking percentage and expect to accrue value.
Right.
Yeah.
It's just anyway, it's a mystery still.
Yeah.
And Justin's doing what he thinks will work, and IOST's doing what they think will work, and EOS is doing what they think will work. And
it's true, and some of these analytics can kind of say the wrong thing, right? Like, just because there's not a ton of staking percentages doesn't necessarily mean that you don't have an active user base, but to me it does. But obviously that could be a total misread of those analytics. But Cosmos DeFi coming to Cosmos, what do we got?
Yeah, this was awesome. I've been happy with Cosmos. They've been really quiet for a long time. I think this is one of the bigger pieces of news for Cosmos. Beginning of the year, they were kind of the talk of the town because they partnered with Binance Chain to basically allow Binance Chain to do things like run dApps and basically use the Cosmos hub, the Cosmos SDK to bring more to Binance Chain and specifically Binance DEX than it originally had. And past that, it's been a little quiet, but now via some assistance from Kava Labs and the Kava blockchain, essentially DeFi is going to be coming to Cosmos in a way that we haven't really seen before. It's a short blog post that we'll link, but basically they're talking about how now Cosmos will have DeFi that includes other assets that typically don't have DeFi, like XRP, for example. So I think there's still some details that need to be worked out, but basically this is another example of the actual fundamental value of the Cosmos hub, the Cosmos SDK, and kind of their overall framework being used for great things when it comes to DeFi. And if you want to get kind of data driven with it, technically, because Binance Chain and Binance DEX are using Cosmos, you could say they already have $5 billion worth of assets on Cosmos for DeFi. It's a technical thing there. Obviously, there's not DeFi like you see in ETH, but I think Cosmos is a giant sleeper.
So you're saying because Binance Chain utilizes Cosmos that you can attribute Binance's volume to Cosmos, but isn't a lot of that off chain?
It is, but it's basically saying that the assets on Binance Chain, right, you can attribute to the Cosmos hub, right? Because and again, it's a stretch, right? It's they're kind of looking for like a way to jump the line.
Yeah.
But that's what they're getting at, is basically like, oh well, we've done all of this work for Binance, so technically, if you look at everything they have there on the Binance chain, we're already at $5 billion in assets. Take it as it is, run with it if you want. But the biggest news here, I think, is that in general, DeFi is coming to Cosmos, and it's going to be running in a way that we haven't really seen before.
So is Kava Labs like a project within Cosmos?
I'm not sure. I was trying to dig on that before we got started. I know they have their own proof of stake blockchain,
okay,
as well. So there's kind of some intricacies there. I'm not sure if they were funded by Cosmos or vice versa, but there's obviously some significant work happening from Kava and Kava Labs when it comes to Cosmos.
Gotcha. All right. Yeah, it says users can use any asset supported by Cosmos as collateral in Kava, making it accessible to more assets than any existing DeFi platform. Okay. And it also says that the assets that they offer right now, BTC, XRP, and Atom. So the obviously the token within Cosmos. Cool, man. That's great.
Yeah, definitely. I mean, staking's been big. Tezos has been in the news a little bit. It's kind of older news, but what's going on in?
So we have basically them in Switzerland. They launched ETP, exchange traded product for Tezos. Basically, they already had this launch for Bitcoin, ETH, BNB, and now they're doing for Tezos, where you can essentially trade that derivative on the Swiss stock market. And the cool thing about it, how it's different from like others, like the Bitcoin and ETH ETPs. For Tezos ETP, it's actually gonna incorporate the rewards that you get from the baking rewards, basically, which is something new. We haven't seen something like an ETP or ETF or some kind of derivative that comes out that's being traded on the stock market, that incorporates the proof of stake rewards, right,
Interesting.
into it. So you have to understand that derivative products can be very creative, right? So it tracks the price of the underlying asset, but in this case, it's also going to include the rewards as well. So you might see like an interesting price development, when you have this incorporated as well. So that's kind of like an interesting experiment. I don't know much about like anybody else having this done before, right? So it'll be interesting to see how that's going to perform. How is that ETP going to perform?
Right.
Do you know how this stock exchange is Swiss stock exchange? Do we know the name of the stock exchange?
Yeah, it's called Six.
Six. Okay, so Six Swiss exchange. Yeah, I see it.
They've got a ton of ETPs, like Deem said.
Yeah.
Some of the bigger, top 10 assets. So to have Tezos in there now is pretty big.
How do they do on volume, Dima? Do you know?
You mean the Swiss exchange?
Yeah, as far as the cryptocurrencies that they've already added.
That's a good question.
That's definitely a good question. Yeah, because it might just be a kind of flash in the pan here. But this kind of goes into the next topic a little bit that we're talking about, and ETH 2.0. And this is the final one we have here. But I think that one of the biggest things that will push crypto into the mainstream when it comes to traditional financial investment is this staking, right? Is this ability to earn basically a dividend on a minute, hour, day, week, month time frame from a trusted partner like Bakkt, NASDAQ, whoever it may be, all of whom have planned on adding assets like ETH or assets like a Tezos if they continue to grow. So that's something that I think pushes the attractiveness of crypto in general up with that audience, and we're starting to see it already in the places where we should, like Six, who has obviously embraced crypto through these ETPs already.
So if another company, like let's say this Six stock exchange, let's say they are offering this platform, right? So you're not custodying your assets yourself, right? It's on the Six stock exchange for the staking, correct?
Mm-hmm.
So why not then just invest in a traditional dividend paying asset? If you're not having the advantage of owning your own crypto because the custody is with this SIX stock exchange, why not then just go with is it based on APR? Like ETH is just paying out better than this other traditional stock? Because I feel like most of the reason that I own crypto is because I can own the actual asset and it doesn't it kind of exists outside the realm of finance in that way. So if I'm giving this asset to a SIX stock exchange and then having that earn, on top of that, why not just use a traditional dividend paying stock or ETF?
Yeah, I mean so there's a difference between SIX and these, in a backed and a lot of these other kind of institutional focused exchanges. And it brings up good point, right? Like if crypto moves away from kind of a more retail audience like you and I, retail investors who see benefits in things like custody, where we can see that in our wallet on our phone or computer or whatever, those aren't the same benefits that a giant pension fund or institutional investor are looking for. In that world, they actually don't prefer custody, right? Because them taking on custody adds risk, right? Which requires insurance, which, is overhead that they don't necessarily want to see. So I would imagine in this ETP setup, there's actually no deposit of Tezos happening or ETH in the future, or whatever it is. Basically, like Deem said, it's a derivative, right? Where it's going to track the price of Tezos, which is going to be obviously way more volatile than a lot of traditional assets you see. So there's going to be massive opportunity for gains just in trading the ETP, but then to have kind of this like 7%
added,
basically a buffer there for these long-term investors or these traders. It's something that I think will be enough addition to this new asset class that will have a lot of big trading desks, a lot of big investors jumping in and saying, okay, well, I'm getting this nice 10 or 12% buffer from ETH or 7% or 8% buffer from Tezos. Whether I think this shit is going to be the next hottest thing, this is an opportunity here for me to make money, right? I'm going to add my liquidity to it because I think my desk can trade it and make money.
Yeah.
So
it's an exposure for sure.
Yeah.
Just looking at the volumes there for for example, like the crypto basket that they have, I guess that just has, the top tokens in it. But, average volume did some math real quick. It's about like a little over 5 million on just that index. For the Tezos, the volume is going to be real low because they just got listed, right? So, so
still low.
Yeah, still kind of low because I feel like these products are still kind of new.
You mean it's not a complete failure when it doesn't have $100 million in volume the first day or the first week it comes out? Wow.
Yeah, I know.
I thought Backed was over, bro.
Yeah, no, Backed is going to be a giant player.
They're flying away. They're flying away with that stuff, man. But yeah, speaking of staking, we do have, I believe is it Tim Ogilvy from stake.us on the podcast this week. So that episode should drop. Is that interview tomorrow, Demo? What's going on there?
It's Wednesday.
It's Wednesday, so we'll have that out on Thursday. So that'll be with stake.us, and that'll be a good talk. We'll probably ask some of the comments that we talked about here today.
Yeah, definitely. It's staked. If you want to check them out, it's just staked.us. That's the URL. As far as the US goes, they're a giant leader in the staking community. They're doing a lot of cool things on the infrastructure side and supporting a lot of really interesting projects like Tezos, and will be supporting ETH 2.0, which has been on the minds of many ETH maximalists and holders. And now in this last article, the CFTC as well. So a little while back, I think it was just last month, basically the CFTC chairman said that he saw ETH as a commodity and expected to see regulated futures for ETH soon, which I want to get to you on why that's so important for ETH as it relates to Bitcoin. But now it seems that the CFTC and SEC are kind of working together to make sure that they, have all their ducks in a row when it comes to ETH 2.0 and the migration from proof of work to proof of stake. I think both the CFTC and SEC are pretty comfortable with the way that proof of work ensures decentralization, but proof of stake is a brand new thing for them a bit. So they seem to be kind of pulling back a little bit. The chairman has said that there might be some concerns with ETH being a security once it migrates to the ETH 2.0. Based on the ways they've classified decentralization in the past, I do not personally think it will be deemed a security. But it's really going to be a giant kind of do or die scenario with regulation for proof of stake projects, in my opinion, in the US. If ETH comes out and is deemed a security, where it's going to have pretty quickly the largest number of proof of stake nodes out there, then it's not a stretch to say that all other proof of stake blockchains will also be a security, right. which carries with it its own problems. So first to you, Deem, and then to you, Q, just on this in general. But Deem, why are futures so important? I know we've talked about this a lot, but it's important to talk through.
Yeah, I mean, and just in general, futures, I've talked about this many times, where it essentially leads to a more efficient market price discovery and a smoothness overall, and the volatility of that underlying asset. So futures are good because people can essentially lock in a price and amount that they can get at a future date or time. I've talked about now miners could definitely use it and lock that in. It's a tool that gives you a way to hedge market volatility, and not necessarily dump your tokens because you're afraid that it's going to drop. So you essentially can hold the tokens and have a hedge there in place that allows you to operate. Is that kind of what you were?
Yeah, that, and just the fact that, I mean, really it seems crypto volume is moving towards futures in general.
Right.
So if you see platforms like BitMEX or Bybit or now Binance, obviously backed as well, everybody, all of the focus is on futures trading versus spot trading. Having ETH be able to be traded in the futures market in a regulated way in the US basically gives ETH the same kind of bullish sentiment for institutional traders as we've seen with Bitcoin over the last,
right.
6 to 12 months. So that's my thought there. But I mean, this could be a giant disaster for ETH and proof of stake in general. So what do you think?
Are there other commodities that have some type of staking, not staking per se, but what is it about staking that makes proof of stake or Ethereum then become a security? Just the payout that you get from a dividend?
Where did you go?
Am I not here? Hello?
Yeah, you're here.
Yeah, you died there for a hot second.
Yeah, what makes staking with Ethereum instantly transforms Ethereum into a security? Is it the dividend yield that you're getting out of that?
No, I think what they're talking through is the aspects in the way that it's decentralized, right? With proof of work, and it's kind of goofy, right? Because it's apples or oranges. With proof of work, they like it because you have to run servers in order to basically secure the network, right? At the broadest definition, right? There's work that has to occur, right? Whereas proof of stake, it has everything to do with wealth, right? You stake your wealth to the network, and thus the network is secured in that sense. So I think they're trying to say that they're not entirely sure that proof of stake decentralization is equivalent to proof of work decentralization. At least that's what the article I read talked through.
So the CFTC is making making their statement based on how decentralized the asset is. That's how that's how they're making the distinction between a security and a commodity. Is decentralization.
Decentralization, and they've come out previously and basically laid out some aspects of decentralization. Some ways, some kind of characteristics that they say, hey, this makes it decentralized, this makes it not decentralized, and thus a security. So that really, I don't think it has anything to do with the staking rewards that would exist, because there are all sorts of various kind of inflationary rewards or dividend type rewards that exist in traditional finance, obviously, but it's their concern and frankly kind of their lack of, you know, comfort with proof of stake versus proof of work. I mean, it almost seems to me like if you've got 1 month the CFTC chairman super bullish on ETH, and then the next month he's like, whoa, wait a minute, that they're like just realizing that, oh shit, this classification that I talked about with ETH is not going to be the case in, you know, 3 months time or 6 months time or whatever. Let me back up a bit, just to make sure that, you know, we don't do something that could hurt us down the road when it comes to enforcement. So, yeah.
Yeah, that's a we could have an entire episode just on this, and I definitely want to ask Ogilvy on when we have him on this week, ask him a bunch of these questions, because I did not know they made the distinction just based on their definition of decentralization, because that's as we know, an ongoing topic in and of itself. So
yeah, it's funky. I mean, I think for all the hate that the SEC and the CFTC gets from crypto, for whatever reason, they've done a good job of kind of embracing the concept of decentralization. I mean, whether you think their characteristics are flawed or not, at least they're kind of trying.
Yeah,
you know?
No, for sure. I think they could have gone a different way about it, right? So the way they're going about it, I think it's really a lot of respect for him. You know, the way they have this structure right now. So
yeah, and like I said, I doubt that the way that Ethereum's proof of stake will be set up will deem it a security, just based on how the CFTC and SEC has characterized decentralization in the past. But it is from kind of a regulatory standpoint something to follow, and obviously something we'll keep you guys updated on.
yeah, absolutely, man. That video we watched earlier today too, I forgot the guy's name. It was Peter Zehan, and I don't know how to say his last name exactly, but he's basically Super Bowl US essentially. So that private credit chart about China kind of got me a little bit bearish on kind of the news that we hear in general about China. If they based on what I saw in his speech there, the purchasing power of China could drastically decrease, and I think we bank on that continuously, like holding or maybe even increasing in the future. Kind of the purchasing power of like retail in China and all of their billion of people. I just think that U.S. probably has a lot more to offer if the CFTC and the SEC can get it right.
Yeah, it certainly could be. That's definitely worth linking. That guy, if nothing, even if you don't agree with it, is a hell of a presenter, and it's a very entertaining, about hours long presentation. Generally, if it's an hour long, I'm like, no thanks. But this one, I can tell you, was well worth it. So
sounds like Western propaganda.
Yeah. Well, we gotta do our part for the Almighty, right?
Yeah.
Yeah, just like everybody else.
Yeah, I'm sure Dima can find a YouTube video there that shows the purchasing power of Russia and the Eastern Europe and how it's going to be number one.
The strength.
Yes,
for sure.
But that's pretty much it today, guys. We kind of went through a lot of networks there, had a lot of good news, talked a little bit about pretty much everything in the crypto space right now. So if you guys are at home, either watching, on the audio version, or you're watching on YouTube, post this live content, leave us some comments, man. Let us know what you want us to talk about, who you want us to have on, because certainly we can reach out and get them on the podcast network. Definitely. So yeah.
Yeah, and catch me tomorrow at Dimitri's desk, 5 p.m. Eastern. Boom.
Yeah, we're excited to talk to the man in charge over at Staked, and we'll see you guys next Monday.
Awesome. Thanks, guys.